with Sean, and this is Real Estate Talk with Sean, where we bring you all the information about real estate. Today, I got a special guest with me, one of the best lenders, not only in the state of Delaware, but in the country. His name is John Thomas from Primary Residential Mortgage. Welcome, John.
Thanks, Sean. Appreciate you having me here. What are we going to be talking about today?
Today, we're going to phase on over to what we talked about briefly last week about FHA loans, but now we're going to talk about the 203Ks and the houses that most people may not want to buy because the kitchen may not be right. Maybe it needs a little repair. So we're going to teach you guys how we go about that today.
Awesome.
So since you're the lender, let's talk about the loan part.
Cool. So most people I want to address commonly think renovation. They think FHA 203k, which is a great loan product. But there's also other options. You've got a home style renovation if you want to be a conventional loan. Mm-hmm. So you can still put 20% down on a renovation loan and not have mortgage insurance if you do the home style. Okay. And then for veterans, a lot of veterans don't even know there's actually a veterans renovation loan where you can, it's similar to the FHA, but you can do it with the VA loan. Okay. So what I like to mention is renovation loans because they all kind of act the same. Okay. The beauty of them is they allow you to purchase a home and fix it up all in one loan, and the work is done after you purchase the house.
So it's done after?
After.
Okay, so basically, let's take it through the timeline. We find the house, put the offer in, we come up with the calculations of how much it's going to cost to repair it, and then we send it off to you as the loan officer, or how does that part work?
Yeah, great question. What I recommend is if you first want to make, if the clients, when you do your initial buyer's consultation, is interested in homes that would qualify for a renovation, that we pre-approve them for a renovation loan up front. Okay. Because the amount that you can be approved for on a renovation loan is usually different than the amount you'd be approved for on a regular purchase because we're rolling the renovations into the loan. Gotcha. So if you're pre-approved for $150,000, you're not going to be able to do a renovation loan for a purchase price of $150 because you would go over the $150 because you got to add the renovations on top. Okay. So we want to proactively figure out how their pre-approval would change so they can look at renovations as well.
Okay, so let's talk about the money part. So say the house needs $50,000 worth of renovation. So how would those loans differ?
So if we're doing the FHA loan, the 203k rehab loan, that's the most popular, you're still required to have your 3.5% investment in the deal according to FHA. Okay. On a traditional sale, it's 3.5% of the purchase price. So if you're buying a house for $100,000, 3.5% is $3,500. Now, if you're buying that same house for $100,000, but it needs $100,000 in work, we take it from 100 to 200. Okay. Now your 3.5% is not the 100. Some agents get confused on that and tell their borrower only need 3.5, 3,500. It's 3.5 of the full 100 purchase plus 100 repair. So now I need $7,000 from you because I need 3.5% of the 200. Okay. So we take your purchase price, add in your total rehab cost, get that final number, and then your down payment is based off of that, 3.5% of that.
Got you. Now, as far as like contractors, because this always comes up, you have to be a certified contractor for that program, or could it just be a regular contractor?
That's a great question because there's some websites and some people that have cashed in on this with certified FHA 203k contractors. FHA does not certify any contractors. Okay. So there is no official FHA 203k certified contractor list. Mm-hmm. There's websites out there that are doing it, but that's not true. They only get certified by the lender that's doing the loan. Gotcha. That's it. The lender is obligated to approve the contractor because the lender's lending the money based on the condition of the home that it's not in when we close. So we want to vet the contractor. So if I vet a contractor, then they're already vetted if another person wants to use them. But there's no official HUD approved contractor list to use. So there's a lot of confusion around that because some people have realized they can make money by creating this HUD certified list.
Okay. So you would basically, so I bring you a client and we're going to go through that process, and then they wouldn't have to exactly go out there and find their own contractor.
No, they're allowed to find their contractor. Yeah. I just have to vet. They bring the contractor to us as a lender, and we're required to vet them. They got to be licensed. Well, if the state that you're doing the loan requires them to be licensed, which Delaware requires licensed contractors, then they'd have to be licensed and insured and meet all the guidelines. And then we're going to request some references because we want to check and make sure, and we'll do a credit check because we want to make sure there aren't any judgments or anything. Because if you got a judgment against him for not doing work, we're going to be like, well, that's not the guy we want, because if he doesn't finish the work, we have the problem as the lender because we've already lent the money. Mm-hmm. And if he takes the money and run, we've got a problem because there's no more money to give out. So that's why it's important for the lender to vet the contract.
So is the money basically given out through all the money, or is it more or less like draws?
Well, all the money's lent up front, but
Okay.
it's not given up front.
Gotcha.
So the money is lent for the purchase up front, and the money for the rehab is in an escrow account.
Gotcha.
And what happens is you don't get access to that money without having an inspection. So the contractor does some work, then he requests an inspection on the work that's done, and then he'll get a draw out of that money back. And then
Gotcha.
when the final work is done and it's signed off, he gets the last draw, the remaining money. So it's done in stages based on inspections of the work done, and the homeowner has to sign off as well, that they're okay with the work.
Okay. Is there anything that a homeowner should think about when they're going to go through this process, as far as like getting a home where you got to repair it?
Just having an agent that understands 203k loans is huge, because the process is different
Okay.
than a normal loan. And if you manage the expectations appropriately and you're proactive, they're not an issue. Because some agents hate them, and the reason they hate them is either because the agents didn't know what they're doing, or more importantly, the lender didn't know what they're doing. Because it's not something where you're like, oh yeah, I could do a renovation loan, and you've never done one and you're trying to figure it out. Or if your company doesn't do them a lot all the time, you're going to have challenges. So
Okay.
we do the whole thing up front, and we service the loan too. So a lot of companies don't service it. They do it and they sell it off. So if you're working with a company that's going to sell it off, your contractor can't even get paid till the loan gets bought and now being serviced by the new lender, because that lender can't release, they're not able to release any draws because they're selling the loan off.
Gotcha.
So for us, the same person you're talking to before you close working it is the same person you're talking to after for the draws and renovation, which makes it a much more smoother process up front. And our coordinator talks to the contractor, the borrower, and the agents, and they're coordinating everything. So really, you have two loans running at the same time. You've got your borrower being approved for the loan, and you've got your property and your contractor being approved, and we run those simultaneous.
Okay.
So we're not gonna wait to get the borrower underwritten. So that's why it's important up front, if you have a good agent and who understands, say, okay, I think this is about $30,000 worth of work, because I'm going to do an estimated pre-approval based on that number you give me.
Okay.
Now, when we dig in the because you're not going to get a contractor to go out and give you quotes on properties. It's not going to happen. They're busy. They don't do free quotes. So you can't be looking, I'm going to look at 5 different houses to get 5 different quotes. Now, you got to be able to work with an agent and or the borrower can get an idea of, this is about $30,000 worth of work. Great, give me that number. I run the numbers. It works. You're pre-approved. Write the offer. Once the offer is accepted, at that point, that contractor needs to be engaged right away.
Right away.
The problem where we run into challenges is when the borrower waits 2 weeks to engage a contractor. The problem is the clock starts ticking as soon as the contract's signed. You have a closing date.
Yeah.
Now, if you miss 2 weeks, I can't even order an appraisal because it's an as-is and an after-repaired value appraisal. So I can't order an appraisal till I have a signed-off bid from a contractor, because I have to give that bid to the appraiser, because he's going to say, this is what it's worth right now, and based off all these repairs, this is what it's worth. And all these repairs are bringing the property to meet FHA guidelines.
Gotcha.
If something's missing, the appraiser say, hey, look, you missed this required repair. So you got to go back to the contractor, get him to add it to his bid, get that new bid, give it back to the appraiser. So there's this back and forth. So that's why, I can theoretically close an FHA 203k in 45 days. The problem is, I always say get a 60-day contract, because contractors usually aren't fast and they aren't good with paperwork.
Yeah,
So that's going to slow down the process. So for the borrower, understanding, working with an agent that's going to give them that pretty good estimate up front. Because if you say 30 and we get in with the contract and it's 50, you may not qualify, or you may not want the payment. Now, sometimes it happens because there's way more work than anticipated, and what your agent would do is go back to the seller and say, hey, look, we budgeted 30.
Yeah.
It's 50. Like, you need to drop the price or we're walking, because it's not worth what we thought it was worth based on $30,000 of work when it's 50. And sometimes that happens. They're like, okay, show us the invoice, okay, all right, we'll drop the price. They realize that anyone else that's going to buy it's going to be dealing with the same level of work that needs to be done. So there's a lot of points where you end up being some renegotiation. And that's why it's important to work with a team that understands what the roadblocks are and can work through them and is anticipating them. So some of them you just step around automatically.
Yeah.
Like working with a good contractor, being in communications with the contractor, getting the bid as fast as possible so you can get the appraisal ordered. But why that part, that's the one file running the renovation, working with the contractor, getting the bid, getting the appraisal ordered. Over here, we're going to run the borrower through underwriting based on that initial estimate.
Gotcha.
Get them approved, and then they'll be approved. Once the appraisal comes back with the final bid, then we go update them, send in that and the borrower updated together, so the underwriter signs off on both, and hopefully you get your clear to close and you go to closing.
Gotcha.
Some lenders will wait to send the borrower in with that, so now you've lost all this time, and you may, if any issues come up on the borrower, now at the last minute you're scrambling to try and clear a borrow condition, which should have all been cleared long before the contracting work was all done.
Gotcha.
That's why you should run 2 simultaneous files.
So the best thing, as far as my role in this, is to be a little bit closer to the actual cost of what the repairs is going to be.
Right. I mean, as a real estate agent professional that's going to be dealing with these, you got to have some kind of level of expertise of being able to have somebody on your team that can give some advice on what that's going to be. Because me as a lender, I'm not seeing the property you're out looking at. There's no way I'm going to give you an estimate of the work to be done. I've never even walked through the house.
Yeah.
Now, you give me the number, real easy. Here's your numbers. Here's your debt to income ratio. Here's your pre-approval. You're golden. Okay. So that's where the borrower and the agent have to be or have some experts or be the expert to be able to get at least something close, so we can run some numbers to make an offer. Because you're not going to get a contractor to do a free estimate on a bunch of different properties that aren't even under contract yet. And if they are, they're probably not any good because they have no work.
Yeah, that's one of the things that come up all the time. Well, I need to get a contractor bid. I'm like, that's not going to happen. You got to get the offer on the property first, get it on the contract, then they'll come out, because you don't even own it at that point. So,
right.
But for myself, my grandfather and my uncle were contractors.
So you have some expertise.
Yeah, I kind of know the numbers. If it's a kitchen and bathroom, flooring and stuff like that, anything structural, when I see that in the house, that's a whole different ball game at that point. Now I'm like, we need to take in consideration. We might need to get a structural engineer to take a look at it. You might want to pass on that property because that could be low or it could be high at that point. So what else? What do you think from a lending standpoint? In a market where the inventory is really, really low, is it more opportunities now to say, all right, let's take that avenue?
Certainly.
Because you could get a good house under value and then put a little money into it and be worth a little bit more money.
Yeah, because there's 2 opportunities here. There's the opportunity with the homes no one else can buy because they're listed as cash homes, because there's lender required repairs the seller's not going to make. And they're at a price point where an investor can't pick it up and make the money, so it's sitting. And the normal buyer's not buying it because they don't know about or they don't qualify for a renovation loan. So those are the sweet spots, because it's a little too much for the investor, not enough equity for them to buy, renovate, and flip.
Yeah.
But if you're going to buy and live in it, you're going to have instant equity. And then the other one is where you've got homes that are perfectly financeable, but they're outdated. So the buyers that want a perfect move-in house are passing on. So those have to be priced lower. So that's a great opportunity because it doesn't have to, the loan is not just for homes that need work. You can totally improve a home. So you can have a home that everything's fine, but it's outdated, and you can put in a brand new kitchen, brand new baths, brand new flooring, even appliances. So you can totally redo a house as long as the cost of the renovations don't exceed 110% of the after repaired value. That's the limit. So you can actually over improve the house to actually just totally get a house you want.
So what about credit scores? Is it any difference between
620 minimum credit score? And the other caveat is you have to have your own 3.5%. You're not going to do a down payment assistance program.
What about, all right, so the money that's being loaned for the repairs, is it a difference between the interest rates or?
No, because it's all in the one loan.
All in the one loan?
So when you get that final, so let's say the whole was $200,000, you're putting 3.5% down, so the whole loan is $193,000.
Yeah.
Now, part of that was for the $100,000 purchase, and the other part was for the $100,000 in repairs, but it's all one loan.
All one loan.
Now, that amount above the purchase price, that money is not going to anybody. It's sitting in an escrow account waiting to be paid out to the contractor based on whatever draw schedule is set up. And that's a contract between the lender and the contractor. We set up the actual draw schedule.
Okay. What about this Streamline?
So the 203k has 2 versions, the full and the Streamline.
Okay.
Streamline is for repairs $35,000 or less and aren't structural. The reason why it's called Streamline is you don't have to have a HUD inspector manage the project.
Okay.
If you are structural or over 35,000, you need a HUD inspector. Now, a lot of people don't know this. HUD just came out with a new caveat. If it's in a certain qualified area, they'll let the Streamline go up to 50, but the property has to be in a certain area.
Oh, wow.
And a lot of lenders don't even know about it and or aren't doing it. We are one of the ones doing this new guideline they came out with, allowing you to do a Streamline up to 50,000 if the property's in a qualified area.
So basically what I would have to do is just send you guys the address and then...
Yeah. And I mean, and again, not having a HUD inspector manage the project, it's good and bad. It's good in is you don't have to pay them and you don't have to get them involved, but it's bad at it, and you could end up spending more time going back and forth with a contractor and appraiser. Because theoretically, if you have a HUD inspector go out, he's identifying all the required HUD repairs right up front before you even order the appraisal. Okay. And he helps the contractor put the bid together, and then he hands that off to the appraiser. The appraiser goes, does the work.
Gotcha.
But it's more coordination because you're going to have 2 bids in an appraisal versus on a Streamline 1 bid in an appraisal. On a Streamline, you just have a contractor's bid in the appraisal. On the full, you've got the contractor's bid, the HUD inspector's bid paperwork, and the appraisal, and they all have to match. And sometimes that's fun, getting them all on the same page.
They all had to match.
But then what happens is post-closing, all the inspections are managed by the HUD inspector. He's the one going out doing the inspections, and he's the one that sets up the draw schedule of when they'll get paid. He works directly with the contractor and the lender that's all done. So the pro is less people, less expense. The con is you don't have a third party managing it that has expertise in HUD, what the HUD required repairs are. Okay. So there's, now there's no cap on the full version in terms of repair amount, as long as you don't exceed the county loan limit and you don't exceed 110% of the after repaired value.
Gotcha. So you guys heard that, right? It's coming from the expert, the man that puts the deals together. A lot of people think me as the agent, I'm the one that's doing it, and it's actually this gentleman right here that kind of gives me the game plan on, and then I just go out and execute it as the quarterback. So where could you be reached at, John?
You can reach me. Office phone is 302-703-0727, and on the web it's www.delawaremortgageloans.net.
Okay. And what else are you doing to educate homeowners?
We do homebuyer seminars every month. So if someone's just watching this, it's just getting started in the process, you can go to DelawareHomebuyerSeminars.com, and we've got homebuyer seminars listed, every month. We got them in Newark, got them in Wilmington, got them in Dover. And that's a great place to start, just to get the information, get the education, and then, you get your process started right there on what step you should take.
All right. Great. A lot of great information here. Thank you guys for tuning in, and you can subscribe, you can like, you can give me a call if you want.
Where do we call you at?
Number at 302-285-9604.
Cool.
You can find me on social media, Sean Brooks Realtor. You look that name up in Google, you'll find all my information. All right, thanks, and have a good day, guys.
Have a great day.